Good morning, traders. This is Michael James with Uncharted Profits Daily. Got another great trade setup for you this morning, this time on MGM Resorts, symbol MGM. Stocks were closed for trading yesterday and Monday in the U.S., but internationally, markets were open and stocks pretty much fell universally across the board. For U.S. markets, that may mean we see stocks continue their slide today following Friday's moderate correction. And so for MGM here, we had MGM take out its minor bullish trend, which you can find by starting at the stock's recent low back here June 1st and tracing a trend line hitting as many lows as you can on the way up. And as you can see, MGM certainly closed below that trend line back on Friday when the general market slid. But before we look at specifically why this is such a great bearish setup, I do want to show you something going on with a cross-section of two indexes that I like to look at from time to time to see where the general market is headed. So this here is the IWF IWD index. All I did was I took IWF, which is the iShares Russell 1000 Growth ETF, and I divide it by the IWD, which is the iShares Russell 1000 Value ETF. So these are the iShares Russell 1000 growth stocks, which are typically tech shares, those that rely on cheap debt to grow. Hence, they're often rate sensitive, or they are rate sensitive. Opposite value shares, which are stocks that are more resistant to changes in rates or less sensitive to rate changes. So by dividing IWF by IWD, you can hit enter here on TradingView, and it gives you a comparison of the two indexes. Basically, when this chart goes up, that means value is underachieving or underperforming. So growth is rising more than value shares are on average. And so you can get a sense that, like right here, this period from this low here, April 25th, back up to this high here on May 30th, growth stocks blew away value shares. And that's something that's pretty obvious if you've been paying attention to stocks, which is that the tech stocks did awesome while the rest of the market kind of lagged. And that's why we had such narrow market breadth. We had bad breadth is another way to say it. All of the market's weight was concentrated, or most of the market's weight was concentrated in the S&P's top few names. And typically that kind of thing happens before we see big corrections, simply because the broader market index is made up of a small number of stocks, which makes it more susceptible to big drops if those few stocks fall. You don't need a broad-based move to pull the index lower. And so what's happening here now on the IWF IWD is that we have a double top forming, meaning that the growth dominance may be about to end. And if the growth dominance ends and growth stocks fall off, that could suck the broader market indexes lower, specifically the S&P 500, as those tech stocks head lower. You can see that double top right here, and the stochastic indicator at the bottom of the chart here is reading at 90.22. That's overbought. Any reading above 80 is overbought, giving us another signal we may see a retracement here. The IWF IWD also closed below the 3-day moving average, which is not critical, but another sign that we may be seeing a double top reversal, resulting in value shares doing better, but really, most importantly, growth stocks selling off, potentially sparking a broader market index sell-off in the process. Now, one last thing, I want to remind you that the methodology we're going to be using when looking at MGM here is the same methodology I use when making my Uncharted Profits Daily alerts, which I send out every evening after the market closes. In order to get those alerts, in addition to specific entry prices for each trade, just click the link in the description below and you'll be taken to this webpage. Click on this button here, hand-delivered free daily trade alerts. Fill out this information and then click Get Free Alerts Now. And the next time I send a free alert out, it will be waiting for you in your inbox with that specific entry price and a chart to go with it, possibly for MGM if you act fast enough. Okay, so back to MGM. Let's take a look at what else makes this continuation trade here so great. So MGM here rallied. I guess it was kind of a successful rally. It rallied off the low on June 1st, had a nice move up. Now, though, after trading above the upper Keltner channel, upper Keltner band here, this higher blue line, it closed below it on June 14th, raced lower still, and then ultimately closed down here right below the high from Monday, June 12th, right there at $42.64 on Friday. And so that close was, of course, below this trend line low. Now, typically, I like to see closes below the 10-day moving average for bearish setups. In this case, that did not happen. The 10-day moving average is this purple line here. It closed above it. However, the 20-day moving average, this orange line running up and down the chart, is negatively sloping now. In other videos I've made, other trade alerts I've talked about, a 20-day moving average, as long as it's negatively sloping, coinciding with what is a high stochastic indicator reading, that's good enough if the stock is able to break a recent trend. And so I like to use that for trend reversals, or in this case, what's kind of a trend continuation, considering that MGM already fell from the peak here on May 1st to the low here on June 1st, 16.79 or 16.8%. That's a big move for MGM. And so what we have here now is the setting of a lower high along this line right there relative to the high back here from May 1st. So that lower high plus this big move lower makes this a nice bearish continuation. And it was really confirmed when MGM took out this minor bullish trend line from the last few weeks. Finally, I already talked about it, but just to confirm, the stochastic indicator is reading at 71.36. Down here, that is a high reading. I like to see readings above 40 when considering bearish continuation trades, which I've mentioned before in my other videos. In this case, well above 40. A lot of traders like to take trades if they're below 40 but above 20. That would be in the white area down here. That's considered oversold territory in the stochastic indicator. For me, not enough. I really like to see those readings above 40 and above 70. It's 71.36. That is even better and indicates this stock could have plenty of room to run should it take out today's low, potentially the 10-day moving average as well, as it moves down toward that 20-day moving average. And those are all great reasons why you may want to consider a bearish trade on this continuation setup here on MGM. Again, if you'd like to get my Uncharted Profits daily alerts sent to your email along with specific entry price recommendations like for MGM here, just go to the link in the description below. It'll take you to this page that I showed you before. Click hand-delivered free daily trade alerts right here. Fill out this information, then click get free alerts now. And the next alert will be waiting for you in your inbox when it's ready. I send these out every day the markets are open with my #1 trade alert for the day. Okay, I hope you enjoyed this one. This has been Michael James with Uncharted Profits Daily. Good trading, and I will see you next time.